Wondering if now is the right time to buy an investment property? Well, let me give you 4 reasons why it may not be right for you in 2022. Hi, my name is Nero from Investment Rise, and our company helps people find property in good growth locations that also gives them positive cash flow. So if that's what we do, then why would I be suggesting that there would be 4 reasons why investing in property may not be right for you in 2022? Well, let's have a look at those reasons first, and then you can decide for yourself if you should be looking to buy an investment property right now, or should you be putting it off? Okay, so reason number 1. You believe that property will be worth less in 5 years' time than it is right now. Okay, now I know at the moment there's a lot of talk in the media about interest rates rising, and that's going to cause property prices to fall backwards, and we're seeing all sorts of reports from different experts at banks talking about 11% price drops or 14% price drops or whatever the figure happens to be. And mind you, I do expect that figure will start to increase over time as different people compete for their time in the limelight. Okay, so that's what we're seeing in the headlines. That can certainly be a little off-putting. I totally understand that. I mean, many people forget that some of the people who are making these predictions right now in 2022 were also the same people in 2020 who said the property prices were going to drop 30%. Okay, so we know these guys have been wrong before, but a lot of people forget. Okay, but the fact is that why then am I talking about not what property prices are going to do next year or even the year after? I'm talking about 5 years' time. Here's why. First of all, I always believe that 5 years is the minimum time you should be looking to buy and hold an investment property. The minimum, okay? So obviously I'm not talking about you speculating, you're buying something now and flipping it in 6 months, 12 months and trying to get rich quick, right? If you're looking to get rich quick, then nothing I have to offer is for you, and you may as well go and look at something else, okay? I believe in get rich safe and often get rich more slowly, okay? So at least 5 years you want to be holding the investment property. Now, why did I pick 5 years? Okay, well, if you go back and look at property prices over the last 35 years across all our different capital city markets, and then if you divide it up into 5-year periods, so from the last 35 years, if you look at 5-year periods, you're looking at 7 chunks of data, 7 segments, okay? And over that 35 years, only twice has a particular market gone backwards, okay? And what were those markets? Canberra went back once and Darwin went backwards once, okay? And by the way, they both went backwards at different time periods, okay? And the 5-year periods that both Canberra and then Darwin went backwards, during each of those 5-year periods, interest rates didn't rise. They actually dropped, okay? But in all our other capital city markets, over any 5-year period in the last 35 years, house prices have risen, okay? So the thing is that, of course, they may not have risen as much, and different markets have performed differently, absolutely, but the fact is they didn't fall, okay? So if you, however, don't believe that's the case, if you believe that things have now changed, if you're buying into the headlines about prices are too high and they're going to fall and property prices are going to crash, then you absolutely should stay out of the market. Property investing is not for you, okay? I'm not here to try to convince you of anything else. If you believe that the property prices are going to crash, stay out of the market. All right. Now, if you look at some of my past episodes, I've shared with you what's happening across multiple markets across the country and which markets are starting to grow significantly. And yes, we're about to go into a phase of rising interest rates. Okay, it's not a matter of if, but when interest rates will rise. Yet, what I can tell you is that there will be some markets that still continue to rise quite consistently and quite significantly, even while interest rates are rising. All right. But the key thing for you is to hopefully take away that if we look at prices from 5 years from now, do you believe they're going to be worth less? If not, then maybe investing is right for you. If you believe no, prices are going to crash and they're going to be worth less in 5 years' time, great, stay out of the market. But if you do look to invest in property, the key thing for you will be to look at markets where rental returns are strong, and preferably where the rents are covering the mortgage and covering all your costs so that you're not out of pocket each and every month, so then you can ride through the wave of interest rates rising and be well positioned for the future. Reason number 2, personal cash flow security, okay, or PCFS, right? Now, what do I mean by that? Well, there's a couple of things here that we need to look at. First of all, you don't feel secure in your job or your business, okay? So your source of income, you don't feel very secure about that. Now, if that's the case, then it's quite likely that property investing is not for you. It might be too risky right now, and therefore you should really focus on shoring up your income source, working on whether it's your business or ensuring that your job is secure before you then look to buy an investment property, okay? But then the second thing is that you are not saving money each and every month. So what I mean by that is either all the money that comes in goes out on expenses, and sometimes you might find that you're getting towards the end of the month and there isn't enough money, so you're now drawing on your credit card or other personal funds or lines of credit, whatever it is that you're doing, okay? If that's the case, if you're not saving money each and every month, then my suggestion is again that maybe property investing isn't right for you right now. Okay, what I would suggest is you go back and you look at your budget, you look at your spending plan, and you look to see what you can tweak such that over, say, the next 3 months or so, you can show yourself that you're saving money on a monthly basis. Okay, because remember, when it comes to investing in property, of course, all property investing carries risk. I've said this before and I'll say it again. If someone is offering you a property and they say it's a guaranteed thing, it's a sure thing, there is no risk here, they're either blindly naive or they're desperately trying to flog you a particular property, okay? Because all investing carries risk. That's why you need to do some due diligence, okay? And you need to ensure that you have cash buffers to ride out maybe a potential period when you can't get a tenant. Maybe it's Christmas time, for example, okay? So unless you're saving money each and every month and you have cash buffers, I would strongly suggest that property investing may not be right for you right now. Reason number 3. You're not willing to get yourself educated or invest to get professional help. Okay, so you're someone who thinks that you can maybe just buy a property off a lovely glossy brochure. In fact, I can almost guarantee that over the next couple of years, we're going to see more of those shopping center salesmen or salespeople, rather, people who, these pop-up stores in the shopping centers that talk about this great new off-the-plan development coming up, and you're going to see them popping up. And if that's what you're going to use for your investing, okay, then I'd strongly suggest that maybe property investing isn't right for you. Because remember, when it comes to investing in property, it's not about the property first. It's about the property last. Here's what I mean. First and foremost, you need to ensure you have a plan, you have a strategy that's right for you. Okay, so that you know, okay, what types of property are you going for? What are your goals? How often are you looking to then buy your next property? You need to have a level of clarity around your overall strategy and your risk profile. So it's about you first. Secondly, it's about finding the right areas, okay? So even though over the last 12 months or so, 18 months or so, we have seen property prices rise almost everywhere in the country. And mind you, I do say almost because there are some markets in Australia that have not risen in value in the last 12 months, or they've risen very, very little. So you are going to have to do your due diligence. And I can tell you that going forwards from 2022 onwards, different markets are going to perform differently. So you can't just buy based on emotion. You can't just buy off a glossy sales brochure. You can't just buy because a particular salesperson has a great silver tongue. You feel comfortable with that, okay? You are going to have to do your due diligence. You are going to have to get some professional help. So how do you know if you're getting the right professional help? Okay, well, the person who's helping you on your investing journey, they need to, number one, as obvious as it sounds, they need to have been a property investor. Okay, there are too many people out there who I know who are in this space who have never bought an investment property before, or maybe they bought one, they got lucky, and now they're thinking they're an expert. Okay, someone who's truly the right person to help you invest, they would have made their own mistakes, right? They would be carrying some scars from their own experiences, all right? And so they can share with you some of their mistakes, the lessons they've learned, so that you don't make those same mistakes. They can literally tell you that from their experience, if you choose to go down this particular path, it's going to cost you, Okay, now personally, I've been investing now all around the country for the last 20 years. I've tried a variety of different strategies, and have I made mistakes? Absolutely. Okay, but I really believe that it's my mistakes that help me become a better property investor and also a better property investment advisor. Okay, and that's why there are some locations right now around the country that people say, oh, these are still going to grow in value, that I'm deliberately staying away from because I've seen this story happen multiple times before. All right, so make sure you are getting the right professional help and you're willing to put in the effort to do your research and due diligence. If you're not, I'd probably suggest that property investing isn't right for you in 2022. And the fourth and final reason why I believe that investing in property may not be right for you this year is that you think you should only invest for the tax benefits. That's your primary motivation. Look, don't get me wrong, I do like the tax benefits that come with investing in property. Many of our clients do enjoy it, but that's not the primary motive, okay? Because if you're investing just for the tax benefits, that's like saying you go to work, you work hard to earn $10,000, then you give it away and you get $5,500 back, or you get $6,300 back, depending on whatever your tax rate is, okay? Would you ever take that deal? Would you ever take a deal where you give someone 10 grand and they give you $6,300 back and you go away happy? No, you would never take that deal, right? But that's the equivalent of what people are doing when they're investing just for tax benefits. Instead, what you want to be doing is you want to be investing in property to build your capital base. So you want to get capital growth, you want to get passive income, whatever your goals are. And then you use the tax benefits to help make that investing journey easier. And that's the reason why they exist in the first place. Okay, so don't invest for just tax benefits. I can see a lot of people are going to make some big mistakes in 2022 if you look to invest just for the tax benefits. Instead, almost ignore them when you begin, right? Do your due diligence, find the right properties, or get the professional help that you need to find the right areas, the right properties, everything else, and then consider tax benefits as cream on top. So there you have it. The 4 reasons why I believe you should not look to invest in property in 2022. Look, if you're someone who believes that the property market is going to crash and be worth less in 5 years than it is right now, if you're someone who doesn't have personal cash flow security, if you're someone who's not willing to get professional help or invest and do your due diligence, and if you're someone who just wants the tax benefits, right? If you meet any of those 4 criteria, then I'd strongly suggest you might want to stay away from the property market. Look, this isn't advice, okay? This is just my opinion, but I do believe there are going to be some reasons why property investing may not be right for you in 2022. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier: How to Build a Property Portfolio That Pays You an Income Each and Every Month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.